Hello class, this is Brian from financialtrainingschool.com and welcome to BO208 News Trading Part 2, continuing onwards from BO113 News Trading Part 1. So, before we start, as a prerequisite, you must, and I emphasize the word must, have watched GT304 Currency Exchange and Currency Strength prior to watching this video. In addition, this is BO208, which means you should have the knowledge of price action from BO202, 203, and 204. So you should know about pullbacks, reversals, and breakouts. Also, watching BO113 News Trading Part 1 doesn't hurt either because that is Part 1 and this is Part 2. In this video, I will be going over 3 chart examples for employment data release for the Australian USD, Euro USD, and the USD CAD. I'll be using 1-minute candlesticks, and the news source will be Forex Factory's calendar, and the good or bad news release is determined by the color of the forecast, e.g. green for good, red for bad. This is just an FYI for those of you that haven't seen their calendar before. And as I mentioned in BO113, this lesson just outlines the basics of news trading. I'll leave the complex concepts for later on when I do the economic series for general market analysis, because like I mentioned before, news trading is basically fundamental analysis, which is based on macroeconomics. So there's no way I can possibly teach macroeconomics in one video. That will be made in the economic series in the future. So let's get started on the examples. I will be using Paint, so that's easier to illustrate things, starting with the Australian USD. So this is Australian USD on October 10th, 1-minute charts. This is at 8:30 p.m. EST. Then this is when employment data came out. So from watching GT304 Currency Exchange and Currency Strength, I taught in the latter half of that video how to determine directionality of a forex pair based on good or bad news. So just looking at the top here, I have copied from Forex Factory's calendar the news release for that time, 8:30. So 8:30 p.m. Australian news. This is red data, so that's high impact stuff. We have the employment change and unemployment rate. So for those of you that haven't seen their calendar before, the first column is the actual number, the second column is the forecast number, and the last column is the previous month's data. So based on the forecast numbers, if these numbers are higher or lower than these numbers, then you will have a green or red color, and that determines if it's good or bad, because 14.5 thousand is higher than 5.1 thousand, so that's a positive change in employment, and it's higher than expected. It's a good actual number. Compared to unemployment rate, you usually want lower unemployment rate, so 5.4% is higher than 5.3, which is bad, so that's why that's red. So I picked Australian USD because Australian USD is one of the easiest pairs that I could find based on news release. This one was straight up, it just went up because it's good data. So as you can see, last month employment went down by 9.1 thousand, and then their forecast numbers were 5.1 thousand this month to go up by, but we got 14.5 thousand. So that's 3 times as much as expected, so that's really good. And then unemployment rate went up by 0.1%, which isn't that big of a deal. Most people don't really care that much about the unemployment rate. Most traders care more about the actual employment change, the actual number. So that 14.5 thousand is really good, and it's a green number, and that is the underlying reason for knowing that the Australian USD is going to go up. There's not much else to say about the Australian USD as far as employment data goes. I'll elaborate more on the employment change for the next 2 examples because it will be more prominent there. But here, the only thing that you need to know when you're watching news and watching these news releases and all that stuff is just to get the overall big picture. Based on the employment change and the unemployment rate, we know that Australia is improving. So in our minds, you need to keep in the back of your head that, okay, we're looking for Australia to go up, assuming that the news pans out properly. So if it does go up, then what we're looking for is we're looking for pullbacks, because we're going to get the data exactly on this green bar, this first green bar right here. So, and this green bar lasts and closes up to there. It starts down here and it goes up to there. Let's say we missed that first minute. Then, knowing that it's going to go up, we're looking for pullbacks. If you wanted to, you could immediately just enter right here on the second candle or you could wait for pullbacks, like this red bar right here. So depending on how you perceive the news, that will affect how you trade. This is why you should be somewhat experienced or know how to gauge currency strength before you trade news, because you need to know what's going to happen eventually. So that's it for Australian USD. Now we're going to move on to the Euro USD. So here we are, Euro USD. This is the same chart that I showed in BO208 for why you shouldn't trade before and after the news release. So here, this is October 5th, 8:30 a.m. NFP release, which is also the same time that the Canadian markets released the employment change as well. So unlike the first example, Australian USD, which had one set of employment data only, this one is two sets. So for the most part, for the Euro USD, you don't have to worry about Canadian markets that much. You only care about the US markets. I'm not going to explain the Canadian part. We're going to save that for the last example for the USD CAD. So for now, just focus on the US data. US data, just looking at the bottom half basically. Last month we had 142,000. This month they forecasted 114,000 and we got 114,000. So we're down from last month. And if you think about it, the US has a population size of about 200 and something million. I don't know the exact number, but it's that ballpark. 100,000 change in a month, that's less than 1%. No, way less than 1%. Actually, let's do the math. 114,000 divided by 200 million is 0.057%. Yeah, that's very small. Normally you get about, at least 1% change or something like that, but this is not even close to that. So this is really, really small. And then we have the unemployment rate, which actually went down. Previously we had 8.1, we projected 8.2, but we got 7.8, so that went down. And then the average hourly earnings, don't really care about that because it's orange data. We don't care about the other things. We only care about the red. The red is high impact. So unemployment rate, like I said, for Australian USD, don't really care about that stuff. We mainly care about the employment change, which is a very small number, so it's insignificant. So that overall just means that the recovery for the US isn't that great, especially since we're down from last month. So overall, that would mean the US markets are doing bad. And we're ignoring Canadian markets for now because that would be explained for the next example, otherwise I have nothing to explain there. So for this example here, US bad market, which means, so see we have Euro USD. That means if the US markets are going down, that means the European markets are going to go up. Does everyone follow that? This is from GT 304. If the US, which is the opposite of Euro, is going down, that means Euro is going up with respect to the US. Because if one goes down, the other one has to go up. So that's why the Euro USD will go up. This goes up while the USD goes down. But overall, it's going to be an up, basically. So that's why we have this up motion here. So knowing that the markets are going to move up, what we're basically looking for is, just like Australian USD, all of the pullbacks. So as you can see, the news release came out here at 8:30. So the first bar, if you wanted to enter on the first bar, and if you had entry there, you could call there, or you could call on the second one. So then now going up, 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 it goes here. This is actually a doji, which I didn't mention in BO208, but that's a doji right there. So then it pulls back down, and then if you got entries down here or anywhere along the pullbacks, you would have been fine because expiring would have set you off somewhere over here. So anywhere below this point, you would have been great. So knowing the overall big picture does help when you're trading news, because you know where it's going to go eventually, so that you trade on the pullbacks, because you know eventually it's going to get there. Assuming, of course, I say this again, that the news pans out. And this is the second time I've said that now. The first time was for Australian USD, the second time is for this pair. I say that because news doesn't always pan out. Sometimes the news release, it comes out and it goes totally opposite. So you just have to be prepared to react. So knowing price action, etc., you would react accordingly. Or if you don't want to bother with the headaches of trading news, just avoid trading it, like I mentioned in BO208. So now on to the last example of USD CAD, which will combine both of these theories. So for USD CAD, we're now looking at both of the news releases because Canadian markets and US markets affect the USD CAD because they're both in the same pair. Whereas the last example, Euro USD, only USD is part of the equation. Canadian is not part of the equation. Although it is part of the big picture, as I'll explain now, but for that pair, you don't really worry about Canadian markets. So here, the thing you have to understand when you're comparing the US markets to Canadian markets is that Canada's population is about 33 million, I think. And as I mentioned before, the US population is around 200 million. So the US to Canadian market is 7-to-1 in terms of population. So that ratio should hold for any changes as well. So if we go up in 10,000, they should go up by 70,000. But if you see here in the employment change, Canadian markets, last month we had 34,000. We forecasted 11,000 here, but we actually had 52,000. So that's really good. That beat the forecast by a lot. Even though unemployment rates went up by a little bit, 0.1% again, like the Australian USD, we don't care about that. We care more about this employment change. So that was really good. But it went up 52,000. But now if you compare to the US only went up 114,000. That's only double. But it should have went up 7-folds because they're 7 times bigger. So using the ratio, they should have gone up by 350,000. That didn't happen. They only went up by 100,000. So this shows weakness in the comparison of US to Canadian markets. We went up by 52,000. They only went up double what we did, but they're supposed to go up 7 times. So that shows weakness of the US markets and strength of the Canadian markets. So since we're expecting the CAD to go up, on this pair, since CAD goes up, that means USD goes down, which means this whole pair goes down. Now, if you're confused with the directionality, then you really need to go watch GT304 currency strength and currency exchange because I explain how the directionality works there. But I'll just briefly explain here. Canadian went up, that means the US went down. When we examine these pairs, the first symbol is the one that's primary here. So this first one dictates the direction of this based on the respective change. So Canadians went up, US goes down, that means USD CAD goes down. The previous example, we had the Euro USD. USD went down, but this pair is monitoring the Euro. So the Euro goes up, so this causes this to go up. Versus here, notice that the USD is on the other side of the equation. This is Euro USD, and this is USD CAD. So as long as you determine one of the pairs, so this we know that Canadians went up, this one goes up, that means the other side goes down, and since the other side is the determining factor of the pair, it goes down, this causes this to go down. So going back to the Australian USD, we know that the Australian USD is going to go up. And this is the determining factor anyways, it's the first pair, so with that we know it's going to go up. So that's like a really fast pace of how currency directionality and currency strength works out. But that basically concludes the lesson. I just went over 3 simple examples on employment data change, and employment data is the easiest one to do examples on because it's the strongest one usually. That's how you can tell an economy is doing good or not based on how many jobs there are, because employment by the end of the day is what matters. Once they have jobs, they get money. That money is used for spending, which stimulates the economy, goes back and forth. And this is I guess the intro to macroeconomics. When I do the economic series, we'll get into like GDP, employment rates, unemployment rates, inflation, production, productivity, and all that stuff. So that will all factor in all together into the big picture. But for now, this is the basics of news trading. Once you determine the overall directionality of the asset that you're looking at, put it into the pair. If it goes up or down, the other one is the opposite. Whichever one is first in the Forex pair will determine the direction of which direction the Forex pair will be going. So that's it. I'm done. As usual, my recommended brokers are 24 Option, Bank the Binary, and Trade Rush. Make sure you guys use my links when you sign up so that you can get an hour of tutoring with me. Full details can be found at ftstutor.com. Hope you guys enjoyed this video, and I will see you guys next time.